In today's session, we'll review Phase B of the distribution schematic. However, there is a point I would like to reiterate. There is a difference between a schematic model and real life. In a schematic model, everything is illustrated clearly, and it appears as if all you must do is go long or short when the event criteria are met. However, in live trading, the picture is somewhat muddled. For example, today, July 22nd, 2025, the price found support close to the distribution range, low at $116,123, and formed a bullish hammer candle. Should we consider it as the anticipated sign of weakness event, or should we hold a bit longer for a touch or breach of the range low? These are the kind of dilemmas that no class can answer. You'll have to figure it out alone and either reap the rewards of your decision or pay the piper. The second point I want to reiterate is that I have explained the buying climax, automatic reaction, and sign of weakness as a simple ABC. However, in live trading, it is often a more complex and lengthy correction, such as a WXY correction. If you are not a rocket scientist, simplicity is the best strategy. These are the basics of range trading. 1. Long the range low. 2. Short the range high. 3. Trade the breakout in either direction after a retest. 4. Avoid the chop in the middle. Am I oversimplifying it? Yes. Does it always work? No. However, even if you just avoid trading the chop inside the range, these rules could help you a lot. Phase B of the distribution schematic involves only two events. 1. Sign of weakness. 2. Upthrust action. Let's begin with the definitions, and then we'll proceed to Bitcoin's chart and try to identify and explain its behavior in a live chart. I know I already explained the sign of weakness event in the previous lesson. However, I've never met a student who didn't benefit from repetition. Sign of weakness, SOW. In Phase B of the Wyckoff distribution schematic, the sign of weakness is characterized by heightened volatility and increased volume, signaling that supply is overpowering demand. Leading into the sign of weakness, the market often tests or breaches the horizontal support level established by the automatic reaction, which aligns with Elliott wave A in a corrective pattern. From a trader's perspective, this breach can resemble the onset of the markdown phase, creating a bear trap that misleads some into anticipating a sustained bear market. However, applying Elliott wave theory reveals that the sign of weakness typically corresponds to wave C, marking the end of a correction and the potential start of a new upside impulse. This insight allows traders to avoid the bear trap and position for the next bullish move. Upthrust action, UT. Following the sign of weakness, the upthrust action emerges as the market maker exploits the liquidity from trapped short traders to initiate a final upside impulse. The market maker doesn't single-handedly drive the market, but intervenes at strategic moments to create momentum, which retail traders, caught in the only up narrative and trap shorts, amplify. The upthrust represents the first attempt to break out above the trading range, but it rarely succeeds on the initial try. Savvy traders, sensing weakness, counter the upthrust with heavy selling, pushing the price back into the range. From an Elliott wave perspective, the upthrust may align with wave 1 or wave 3 of a new impulse. Traders should monitor the price behavior during the pullback into the range. If the price holds above key Fibonacci retracement levels, e.g. 38.2% or 61.8% for wave 4 or wave 2, and avoids a collapse, the bullish move may still be intact. This chart shows the final distribution phase of Bitcoin's 2021 top. I chose this chart because it effectively illustrates the point I made at the beginning. According to the distribution schematic as illustrated in the books, the sign of weakness event should have breached the range low. As it is, the sign of weakness event is either missing, or maybe we can consider November 1st as a sign of weakness. The upthrust event was on November 8 and 9. You can see how the buyers attempted to push Bitcoin above the range high on November 8th and how the sellers countered that move. Again, this is not like in a schematic because the upthrust after distribution immediately followed the upthrust event, which signaled the end of the bull market. The second event I would like to go over with you is the 2024 reaccumulation. The reasons I chose this demonstration are that I want you to see how the mechanics of accumulation and distribution are similar. The second reason is that this reaccumulation phase illustrates the difficulty in deciphering the chart in real time. I will go over this accumulation range in detail after we progress with our lessons. Currently, I aim to highlight the following events: the buying climax event on March 11, 2024, the automatic reaction that followed and ended on April 29, 2024, the sign of weakness event on July 1, 2024. Based on what we learned, you would expect an upthrust action to follow and at least try to breach the range high. Instead, the price formed a lower high, continuing the corrective price action. My point is that in this lesson, as in every class, we are studying patterns and principles. However, don't expect the reality to be a picture-perfect replica of these principles. Okay, let's wrap up this session. Today we learned two things. 1. Phase B of the distribution schematic, which includes two events: A, the sign of weakness; B, the upthrust action. The second thing we learned is that reality doesn't obey textbooks. Therefore, when you apply these principles to your trading, you must use nuance and be guided by the market structure. I hope you found this lesson helpful. If you have any questions, please write them down in the comments section, and I will do my best to respond ASAP. I will see you in the next video.